For more on today's decision, let's bring in former Cleveland Fed President and CEO Loretta Mester. She's also a CNBC contributor. Loretta, great to see you.
Nice to see you.
What was your take of Jay Powell's press conference, his forward guidance specifically?
Yeah, I mean, I think it played out exactly as expected. I mean, I think coming into this, it was clear that the Fed should be thinking about pausing, and I think he made it clear that that's what's on their mind. The dot plot showed half as much reductions next year as the former dot plot did, which is exactly right. I thought something significant he said was that they have reduced the degree of restrictiveness quite a bit. And I think that's important because I think that's kind of where their mindset is. So if you think about what they were doing since September's recalibration, now going forward, this is really about balancing those risks, making sure that they keep the funds rate at an appropriate place so that no matter how those uncertainties that you've just been talking about play out, they're in a good position to address them, either by holding at that current rate for much longer than anticipated, or if things on the employment part of the mandate weaken more than they expect, then bringing the rate down faster. So I think they're still in a good position here. I think the markets are reacting in a way that's kind of interesting because this was, I think, pretty well expected. But maybe it emphasizes that there is still a lot of uncertainty out there about the economy for next year, including what fiscal policy actions we're going to see.
Loretta, it's Karen. Thanks so much for being on. Given how hawkish he was and how he had statements like, more cautious in the future, that sort of thing, and kind of the reluctance to even make this cut, can you explain how did it happen that it actually did cut, even though the market seemed to be forcing them to not? What goes on in the room that makes them come to this conclusion?
Yeah, so I think, going into this meeting, I'm sure there were a lot of people who came in saying, I could see it going either way. You come in sort of with your formulated view. They did nothing in the intermeeting period to really persuade people that a pause was likely to happen at this meeting. And more importantly, why go forward with it? Well, the narrative surrounding the economy hasn't changed. If you look at the projections, and what Chair Powell said at the press conference is they still expect inflation to come down toward 2% over their forecast horizon. It won't get all the way to 2%, but they expect it to be moving down. And they still expect, the labor market to remain healthy. Yeah, a tick up in the unemployment rate over time, but still a healthy labor market. It's just going to take a different policy path to get those outcomes. So it will take probably more restrictive policy, certainly more restrictive than they thought in September. And that would be the reason you could go forward with the rate cut of 25 basis points, as long as you coupled it with the information that they gave us in the communication, which was, look, from here on out, we're really going to be thinking about each meeting and looking at the cumulative information. So the way I think about it is over this period where they were recalibrating, coming into the meeting, is the evidence, start with a base case, we're going to be cutting. And now what's the evidence that would sort of say go against that? From now on, I think coming into the meeting is we're not cutting at this meeting. What's the evidence? What's the accumulated evidence that says, okay, we can resume those cuts? That's how I would be thinking about it now. So it's basically a subtle change of, what's the base case going into a meeting? And then what does the accumulated evidence tell you? Okay, is it time to resume? We can bring it down another notch because inflation has resumed coming down and we think it's on that path towards 2%. Or is it, no, we still haven't seen the progress on inflation, and so we're going to hold pat for another meeting. And that's how I think about it. So it's a subtle change in sort of what the base case is going into a meeting. The overall, forecast remains the same, that eventually they'll be moving rates down because the economy is going to get back to 2% inflation.